Well, from the title of this video, you can tell this is going to be a price prediction video for this upcoming week revolving around AMC. But also here in this video, besides the regular data that we go over, we are going to talk about how you can potentially profit off of a major market downturn to the tune of making thousands, if not hundreds of thousands of dollars. Now, I am not endorsing to be super risky. I'm not saying to sell your whole portfolio and to YOLO into these kinds of trades. I will show you guys some of the trades that I have on right now that if we do see some certain events take place, like we're going to talk about here in this video, that could pay out big with a very small amount of money. So you don't have to sit by and watch your portfolio crumble, whether you're solely in AMC, which I'm not saying AMC is going to crumble. I'm actually very bullish for this week. Or if you're just invested in index funds or other stocks as well, you don't have to sit back and close your eyes and wait for the pain to stop. You can be like us in the trading community and hedge out your portfolio. So essentially make a lot of money. Now, if you guys want access to all of my trades in real time, link for that down below in the pinned comment. But hopefully you guys do know today is Super Bowl Sunday. So let me know down below in the comment section of this video who you are rooting for. Obviously, I'm from Michigan, as a lot of you guys do know. So I think this is a secondary holiday to a lot of people that live in Michigan because the Detroit Lions have never been to the Super Bowl, and Matthew Stafford, whatever you want to call him, going to the Super Bowl. I guess it's just a Michigan thing. We just aren't worthy of a Super Bowl, apparently. So it's a pretty big deal. Let me know what you guys are, or who you guys are rooting for down below in the comment section. But let's not waste any more time on the intro. Let's get into the info. Thank you guys for watching Apes and Apettes. My name is TCI. Consider subscribing to the channel and liking the video. So let's dive into it. AMC had a very, very positive week last week. No surprises there. You could see all the green candles. We have not seen this many green candles in a very long time. I mean, you really have to go back to this time period. This is really September of 2021 to see this many consecutive green candles and positive days. We did hit that low at $13.40 per share, which was obviously super oversold, and on any fundamental evaluation you would say that AMC was undervalued at those prices. Me personally, I would still say AMC is undervalued at $18.81 or $18.84 if you include after hours. But on top of that, I do think there's a lot of other things going for us in the short term. Now, keep in mind, there's a lot of geopolitical tensions that are going on around the world. No surprises there. We got some news to go over on that front as well. But also at some point, once the Roni numbers keep going down, I think money is going to flow into recovery stocks as well as more of your retail stocks that are severely shorted into the ground. As those numbers go down, a lot of people are going to be excited for cruise lines, airlines, movie theaters are included in the recovery trade. So I do think you're going to see that secular rotation after we get out some of these fears in the near term revolving around the Fed and that Russia-Ukraine situation. So we are going to come back to the technical analysis in just one second, but I do want to go over some of the news headlines that we are now getting. So Russia did pull some of their ambassadors out from Ukraine as tensions are mounting. This is breaking news, and this just goes to show how much this situation is really starting to escalate. The US, which, believe it or not, I'm sure you guys already feel me on this, they know more than they tell us. So when they tell us get out of Ukraine in 24 to 48 hours, they know something that they're not letting out. So odds are they will invade. I'm still on the side of I don't know. I don't think they are going to, because of a lot of reasons. It's going to cost Russia a lot of money. We're going to sanction everyone. It's going to hurt inflation because oil prices will go through the roof. That could also be another hedged trade, which I will go over here in this video. But long story short, I don't necessarily think that is going to happen, but it certainly is going to put a lot of pressure in the short term on the stock market. No doubt about that. We definitely seen that on Friday. But the biggest thing that is going to cause some level of fear in the markets is going to be that unscheduled, now scheduled Fed meeting for Monday at 11:30 a.m. There's a lot of talks and rumors about a potential Fed rate hike, and I am also not really in the camp of 100% believing this is going to happen. Why? Because the Fed has always been transparent with us about the moves that they are about to make. Does that make sense? Should they do this? Yes, that is the part of me that thinks they will. Also, the fact of these rumors that are flying, it's not necessarily a black swan. It's kind of something pretty much everybody that is actively investing in the markets knows about. They know there's a possibility on Monday after that closed door Fed meeting that rates could be hiked. That is a reason why I think the Fed might say, hey, you guys kind of had a message this was coming. Even after Fed Bullard last week, I believe on Thursday, said that he would not oppose a intermediate rate hike, which would be a surprise rate hike like we could potentially see on Monday. If that happens, it's going to throw a wrench into everything and the markets are going to crumble. The markets would drop, my estimates, 3 to 7% if they did that, for a lot of reasons, because that's obviously not a good thing. It's very unprecedented, and the last time you seen an emergency rate hike was really in March, when the Fed came out and said they were cutting rates to 0, and that spooked everybody, and you've seen a huge drawback in the markets. But we will have to play that by ear to see if that actually does unfold, the Russia invasion as well as the Fed raising rates. So we will keep you guys up to date on exactly what is going on and what that means for your investments. But we also have a ton of other economic data coming out this week, as well as other Fed speakers. Keep in mind, this drawback that we really seen on Friday was all due to the Fed. This move right here was Fed Bullard coming out and saying all of those statements like we should raise rates immediately. The old Fed, as soon as they seen 7.5% inflation, would have came out and done an emergency rate hike. That's what he said. That's not what I said. That's what he said. So markets freaked out for good reason. And that's why you've seen that move on Friday. And if the Fed comes out and they're even more hawkish, even if they don't do a surprise rate hike, that could also move the markets. But you do have the PPI data that's coming out 1:30 p.m. on Tuesday. You also do have the retail sales that is coming out, I believe, on Wednesday as well at 1:30 p.m. That also does move the markets a lot. You have Fed speakers that are speaking, I believe, on Wednesday. Fed Bullard's speech, at 4 p.m. So that's going to be an after hours move on Wednesday. And then you do have other things here and there. Fed Woolard on Thursday, and then Fed Williams on Thursday as well. So you're going to get a ton of Fed speakers this week, a lot of economic data. So we will keep you guys up to date on what is going on, what is being said, because this will, believe it or not, affect AMC. Now, let's move on from this and let's get into the AMC specific data, and then let's get into how you guys can hedge out your portfolios and make a ton of money. I mean, the Facebook puts that we called out and we had trades on in the trading community, again, link down below in the pinned comment, was $60 into $3,000 overnight per contract. That's ridiculous. We hit the Snapchat calls, we hit the Ford puts, all of those were in between 150% on the Ford puts and 800% on the Snapchat calls. We've been doing very well over there, so if you guys want to check that out, never a recommendation, but nevertheless, if you guys trade anyways or you are interested in learning, that is a tool for you guys, and that's the way that you should look at that. So diving into the max pain, you can see the max pain for this Friday is going to be $19 per share. This could obviously update, but $19 per share would be a slight upside move from here, and that's really what I expect. I think no matter which way the cookie crumbles, if the markets are really bad, AMC will still go up. But if you see the markets take a chill pill and they calm down, AMC should go up even more. So I think it's going to be a bullish week overall, no matter what happens. And don't quote me on that, because that's assuming Russia does not invade Ukraine, and that is assuming that the Fed does not raise rates on Monday. If they do, the markets could fall substantially. That is why this price prediction video is a little bit harder this time around than it was last week. My last week price prediction was in between $16.50 and $17.50 per share, and we obviously closed above that. We closed over $1.30 higher than that, so I'm very happy about that, and I'm happy to give you guys these bullish price predictions, or bearish sometimes they're bearish. But it really is hard to tell when you have such a big potential catalyst. We just don't know if it is going to happen. I'm going to assume that it's not going to happen, because statistically it's not a very high likelihood that it will happen. Now, as far as the Ortex data, you're looking at 22.15% short interest of free float, 113.68 million shares that are sold short, cost to borrow max of 2.9%, and the share utilization, which is still 100%. If you guys are unaware of why the share utilization is 100% and you just don't know yet, it's because the people that own stock in AMC, like Vanguard and BlackRock, that have increased their positions by 500% or more in the last year, they're not going to lend out their stock for 2% if they think the stock, and it's not even a question, the stock's been going up 10 to 15% almost every single day. They're not going to lend out their stock for 2 to 4%. So that's why, and that is a very bullish sign. Nevertheless, not even to mention what the impacts of 100% share utilization actually have to the cost to borrow or the price of the stock, it's a very bullish situation. As far as the days to cover, you're sitting at 2.51. Now, the stock tracker data, you do see a lot of calls that are actually out of the money. A lot of options have been placed, and this is where I would just recommend but not recommend to you guys, be very careful with options. It goes without saying they can expire worthless. If something happens this week, the stock could go down, and you need the stock to go up, especially with AMC's high implied volatility. That's why I don't currently have any options in AMC. I have a boatload of shares. It's my biggest losing position in my portfolio, and that is that. 28,000 calls that are in the money, 234,000 calls that are out of the money. That is a substantial amount. That's 23.4 million shares, additional shares that would have to be hedged for if they went into the money this upcoming week. That is like 30% of the volume on any given day of AMC, sometimes more than that, sometimes 50 or 60% of the volume that we see on any given day. So nevertheless, that is a very large amount, believe that or not, and it can have an impact to the price of the stock. As well as that, you do have about 36,000 puts that are in the money. That's about 3.6 million shares that would also have to be bought by the market makers to de-hedge the market makers' obligation of the put side, the back end put side of these contracts. So keep that in mind. 89,000 puts that are out of the money, probably going to get waxed this upcoming week. So looking good in that aspect. As far as my actual price prediction for AMC, I like to give you guys ranges because I do think it's going to be bullish. My really low end range is $18 per share. I think you could draw back a little bit if some events do unfold. $18 per share, but really where I would put my price target is about $21 per share. I do think we will break out past that $20 resistance level. That's really at the top end range of this Bollinger Band. That is somewhere that we were just at not too long ago. $20 per share. I think that is definitely on the table, and that's what I would expect as long as these fearful events like the Fed or Russia does not start to unfold. So that's looking good. Volume is also looking very good. We did close above the 20-day simple moving average, so it is confirmed we are in a technical breakout as we do currently speak, and this little consolidation back and forth the last 2 trading days really tells me that we're looking for that next leg up, as we did close above $18.50 per share. This is that line that I've had drawn out for a while. It does look very good, and by all means we could go to $23 or $25 per share by the end of the week. I do think it's bullish. Be careful, protect your capital. I'm not saying to risk everything and start gambling. Odds are you probably already have a lot of shares, so you will not miss out on a single thing if AMC does rally. Also, the MACD is incredibly bullish. So that's my price prediction. In between $18 per share, could be a slight pullback, and $20, $21, or even $25 by the end of the week. There's a lot of variables here, so also keep that in mind. Now, as far as some trades that I do have on my portfolio to hedge out my portfolio and to protect it, and why I'm showing you guys the Robinhood portfolio is because I have, some of my other larger, more concentrated positions in this portfolio, so that's going to be the one that I do opt to protect first, and that is exactly what I want to do. So I did buy, and my strategy right now is, if you do see the markets are taking a downturn, like on Friday, we bought SPY puts. I think I bought 5 or 10 of those. Don't remember the exact amount. I believe 5. And then I sold out 4, kept 1 for free, and all is fine and all is dandy. Or I think I have the puts already, whatever the case is. I bought 5 to 10, sold out some to keep some for free, because even $100 or $200, if you catch a flash crash where you see a 5 or 10% down day, or 10 to 15% down week, if the Fed were to jack up interest rates, that $100-$200 could turn into $10,000 very, very easily, and you're safe. You're protecting your initial investment, so there's no way that you can lose out. Also, I think volatility is priced very low at the current moment. So we did go ahead and buy 2 UVXY $20 calls expiring February 25th. I want to make sure I catch the FOMC minutes that come out this week. I believe on Thursday, if not, or Wednesday, if not on Thursday. So I did buy 2 of these. I did not make these free. Currently worth $356 in total, worth $178 a piece, up $190 or 115%. Average cost was $83. Volatility premium, the UVXY inverts the market. So when there's a lot of volatility, like we could see, it was up 18.49% and 0.24% in after hours. This goes up. And as you guys can see, if you look at the charts, it can go up a lot. If you catch a flash crash, this tends to go up 10x. So if that happened, the UVXY would go to what, $200? You'd make $10,000 to $20,000 per contract. So keep that in mind. These events don't happen all too often, but when they do, you can get paid out big with a very small amount. So I'm not endorsing you guys gamble, sell the portfolio, and put it all into the UVXY calls or SPY puts, but nevertheless, it's a great way to take a small amount into a big amount if you do catch a move to the downside. Also, something that I do also like a lot is going to be the USO or WTI. These are oil funds, the United States Oil Fund. And obviously, if Russia invades Ukraine, oil will go up and possibly even hit $115, $125 per barrel of oil. And this would go absolutely insane. You would see a massive candle to the upside because Russia imports or exports about 30% of the national oil last time I checked. So that's going to make prices go up. Simple supply and demand here. And that could also be another way to hedge out your portfolio if you do think that is going to happen. I don't know. I am probably going to put on a trade on the United States Oil Fund or WTI, but I'm not sure at the current moment. More than likely, probably 70% sure I'm going to, but I also have a lot of downward exposure at the same time. So that is really the gist of everything you guys need to know. That's the price target. That's the data that is coming out. That's the Fed rumors. Just everything you need to know. So if you guys also want to build on this conversation about trading, check out that link down below in the pinned comment. You can ask me any questions. We can go over any specific trades you are looking at. All of that good stuff. Thank you guys for watching. Hit that like button for me. Subscribe to the channel. Make sure to comment down below. Who do you want to win the Super Bowl? If you guys have also not signed up with Webull, Moomoo, or Public, check those links out in the description of this video to get yourself some free stock. Thank you guys for watching, and I will see you in the next one.